God. Hey, everybody, this is Hyperwave. I'm Leah Wald. We have Tyler here. You know us, we're goofy. I am streaming from our fourth office, Tyler, which is actually my laundry room, right? You know, so naturally. So we'll see. Uh-oh, looks like people are coming in to do their laundry, so I'm going to go really quickly to you. We're focusing on Bitcoin, I believe, today, and then talking a little bit more about Hyperwave. Yeah, they're totally coming in. I'm going on mute and going off to you. Bye.
Okay, very good. Thank you, everybody, for joining us. We're going to take a look at Bitcoin today. Tone has been on top of the Bitcoin story. We had a pump several days ago. Willie Woo and Tone and I went into a lot of detail about many things having to do with Bitcoin. But I just wanted to give my 2 cents on the short term, also the intermediate term, and more we're going to be talking about the long term because of our Medium article. An awful lot of people have been saying, how is it that this clown is talking about going down to 1,000 first and then going up to 10 million? That's very important to understand. I wanted everybody to hear from Leah and myself that we are the ultimate Bitcoin maximalists. We believe in it. We think it's going much higher. That's why we went to Unconfiscatable in Las Vegas and taught our Hyperwave workshop. We wanted to be around people that agreed on the fundamentals of Bitcoin. But today, what we're going to do is we're going to review the short term, intermediate term, and long term. Tone has got a new chart out that he hasn't published yet, but he's shown it a couple of times. That's fascinating about his timing. Everything with Tone is more timing than it is price. With me, it's price, and most of the time I have no idea on the timing, other than I can divide up into short, intermediate, and long term what I am talking about. And when I say the trend is your friend, I'm always talking about the long-term trend. But I make it very clear that within the long term is made up of intermediate term, and intermediate term is made up of many short-term pulses. Long term is made up of intermediate term pulses. But the long term is very clear. It's easy to establish, easy to understand. And so the basis of our money management is always on the basis of that long term. So we're going to go right to screen share. And we are going to go right to our Bitcoin chart. And what we will do is we're going to go over some basic observations of this chart. So this is the entire hyperwave of Bitcoin. It looks very similar to what appears to be a hyperwave, but I don't believe that it is, of Litecoin. I have not found any other hyperwaves in the crypto space. So one of the reasons I'm going to bring this guy down to here, and that's close enough for government work on this particular thing we're looking at. Okay. So what you're looking at is you're looking at a move after a long phase one that goes back 7.5 years into a phase two, a phase three, a phase four, a phase five down, phase six, and phase seven. Now, anyone that's listened to us for a year knows that we believe that the move up in all cryptocurrencies, and specifically in Bitcoin, occurred on these two bars over here. And at that point, I made some declarative statements about where the price was going to go. And I said that the price was going to go back to $1,000. what I didn't know and couldn't know is what kind of intermediate term moves would we get in between this top and the ultimate bottom down here. And we've had one intermediate term down and one intermediate term up, a second intermediate term down, a second intermediate term up, a third, a fourth. And then ever since this fourth intermediate term move, we've had a series of 1, 2, 3, 4, 5 short-term moves, and then an intermediate term down, which is where we are. Now, people say, okay, what do you mean by short, intermediate, and long? Well, that depends on what asset class you're talking about. This terminology I'm using now is for cryptocurrency, in particular Bitcoin, in terms of short, intermediate term, and long. Normally, short means days or weeks. Intermediate means weeks or months. And long term means months or years. But as you go from asset to asset class to asset class, those things vary, but basically stay about the same in terms of days and weeks, weeks and months and years. Okay. There's three different types of basic investing. There's speculating or gambling, there's position trading, and there is investing. The first two are not investing. The first two are forms of speculation where you're attempting to guess or formulate what the next move is going to be on a short-term or intermediate-term basis. When you get into investing, you are almost always interested in only the long term. You use intermediate and short term in order to enter or exit positions to your advantage using money management techniques. All of everything I just said takes hours and hours and hours and webinars and a lot of logs to explain in detail. And I'm not going to do that today because all we want to do is talk about Bitcoin. When you're looking at a weekly chart, which is what we're looking at, we're talking on the intermediate and long-term scale. And that's the way I approach everything. So the one we are looking at now, the question is, what next? Well, on a long-term basis, what is next is that we are going to go sometime in the next months or year or years to lower lows. And the way we get to that conclusion is by looking at some technical indicators such as this one. I just put the stop and reverse points on, which are a series of little circles that say if that circle is hit, then the trend is possibly changing on the intermediate term basis. And as you see, right up through today, for many, 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 many weeks, it has been very clear that we are in a downtrend and remain there as of this afternoon. That has been true all the way since 17,000, all the way down till one of these intermediate term moves was able to break through the stop and reverse points for a period of 4 weeks, 1, 2, 3, 4, before returning to a downtrend. Okay, so on the intermediate term basis and on the long term basis, nothing has changed for the past year, going on 13 months, going on 14 months actually. Okay, let's take a look at a shorter time frame then. Let's go down to a 1-day chart. So we're dividing the chart we just looked at into fifths or sevenths because we're talking about Bitcoin. 7 of each of these go into a 1-week bar, which is the one we just saw. And here we see that there are very long periods of time that stop and reverse points keep you out. But there's also short periods of time lasting up to a couple of weeks that even those long-term trends and intermediate-term trends are interrupted by shorter-term movement. That is what we just saw 4 days ago. 4 days ago, we had a spike, as we've seen over and over again, in the price going opposite the main trend. And I don't get excited about those, even when they take out stop and reverse points. However, short-term traders or speculators or gamblers get very excited about it and want to play the counter trend bounces. What I always go back to is, in a long-term downtrend, what you want to do is sell pops. You don't buy pops, you sell them until you've got evidence that the long and the intermediate term are also going in the same direction, which they are not. Therefore, what I would expect on this chart is, after the big pop and 3 days of not going anywhere and not even getting back up to the high of the wick of that pop, that we are destined to come back down and break the stop and reverse and start a new trend lower. So let's go to an even shorter chart. We'll take a look at the 4-hour. The 4-hour chart gives you some hint of what I just said, because here the stop and reverse points are moving up so quickly that even a small drop down to 35.66, we're at 35.92 right now, 35.90, it's dropping like a rock, will hit the stop and reverse point, ending this short-term pop, just as it did here and here and here and here and here. So now we're looking short-term. So anyone that was prescient enough or lucky enough to have bought when we broke through this stop and reverse point could have ridden this all the way up. And if they had been listening to traders that are looking at the longer terms to determine the ultimate direction, they could have been getting out anywhere on this day or any of these following 4-hour candles. Now, is it possible that we're going to get another short-term spike up? Of course it is. Am I going to be playing it? No, I haven't played any of the short or intermediate term moves to the upside in a long-term downtrend. That just runs counter to everything I believe in. But for those of you that do, just take this for what it's worth, that nothing in my mind has changed with this action that occurred a couple of days ago. Okay. Now we're going to come down to real short-term stuff. And on the real short-term, meaning an hourly chart, or we'll even go down to the 30-minute, you see that all of this action that we're looking at now that looks like a perfectly good chart is simply the sideways movement off of this big spike. And we've already had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different trades. In and out, in and out, in and out, in and out. Some people will play each of those trades, and that's perfectly fine. Everybody has to choose what they're trying to do with their day. I'm just not interested in it. So on a very short-term time frame, I am not saying you can't play any of the altcoins or Bitcoin any direction you want. That is not investing, however. That is exactly what the names imply in terms of speculating or gambling. Okay, now I'm going back to the weekly. I'm going to roll it up looking at the whole hyperwave, and I'm going to take those stop and reverse points off because some people don't really get them or don't feel comfortable with them. And I'm going to take and put on the Bollinger Bands, and then I am going to take a look at what they're telling us on long, intermediate, and short-term basis. The Bollinger Bands, I have been saying all along, since we attempted to get back here above the middle Bollinger Band and never got a full candle above it, we're saying that the long term continues lower. On this pop, we couldn't get above it. On this pop, we did get above it, but not a full closing candle, and then fell back. Here we tried again, all through here at the 6,000 level. We tried, and I kept warning, if all you want to look at is Bollinger Bands, it is telling you that there's tremendous resistance at the middle band, and unless we can get a full bar above it, we're not even going to make it back up to the top. And we have never made it back up to the top in the last 12, 13, going on 14 months. So that's just a little clue that use these long-term indicators to help you understand when to enter and exit trades. So what am I expecting on the intermediate to long term due to the Bollinger Bands? Well, we actually here and almost here had bars below the lower band. And that's all it often takes in order to get a move at least back up to the middle band. And from there, if we were to get a entire bar above the middle band, that could then lead you up to the top band. Well, none of that happened. And it's now gone on for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks since we penetrated the bottom band without any upside participation. That tells me this is weaker than almost everybody believes, because this sideways action lulls people into thinking there's some kind of support here. The stop and reverse says that is incorrect. Hyperwave says that is incorrect. And the Bollinger Bands are saying that is incorrect. The most possible outcome is a move back down to the lower band, which is 1939 right now. So keep that in mind. I will take the Bollinger Band off and go to the moving average. And I'm going to take the candlesticks off. So we're looking at Consensio. Forget all the horizontal lines in my phase 2 and phase 3 line. Just look at the 3 moving averages. Consensio says that on a weekly basis, if you've got price below the long-term moving average, which is with this gold one, and below the intermediate term, which is this purple one, and below the, if the price is below those moving averages and those moving averages are below each other, that is a bear market on a weekly basis, because it's projecting out over many, many weeks, months, or years to come until they change and start going up, which they cannot do unless the price starts moving up. So now I put the price back on. And what does it show? It shows the price for the last 2.5 months since this break from 6,000 has been unable to close on a full candle fully above even the weakest, shortest moving average. That is very bearish. That implies that the long-term moving average, which is accelerating down, is going to keep restraint, and even the intermediate and short term. And once again, I'm using very short term moving averages here, 3, 7, and 30. Even those very short term moving averages are able to keep the price in check. Very negative from my perspective. Okay, now I am going to take the moving averages off, and I'm going to move to the RSI, which you've heard me talk about on a number of occasions. This one on the bottom, and what it is sitting at right now is 35. It did briefly pierce 30 on this tremendous drop that we had from 6,000 down to 3,100. But the sideways action of price has allowed this to slowly move up so that it's now 5 full percentage points above being oversold. If we were sitting down at 25 right now, I would be making statements about the possibility of a move up. But going back to this part of the chart, I pointed out all of these huge peaks in terms of being wildly overbought as we went to the upside. The fact that we don't have anything below the 30 line oversold tells me this is nowhere close to being a bottom. And then I will take that one off and just go to one more, the MACDs, which continue to be in negative territory on a weekly basis. We've got this one little tiny positive histogram, but you can see that the two moving averages are moving sideways. And that's why for the last 3 weeks, the histogram is barely changing. That is not a positive crossover. We would need to come all the way up to this level, and the histograms would be growing green. We actually saw similar action back September, October, and November, in which the histograms, even though the price was flat above the 6,000 from 5,800 to 6,200, that gave us a flattening of the MACD. The big drop took us into negative territory. We have not recovered from that negative territory. So short term, intermediate term, and long term on Bitcoin remain down, in my opinion. I wanted to go into a couple of other very important things off of this chart. And we want to talk about the webinar that we are giving this Saturday and Sunday. But I want to do it in the context of what I want people to come away with after 4 hours on Saturday afternoon and 4 hours on Sunday afternoon, which are the 8 hours that I used down in Las Vegas to teach 55 people how, why, where, and when to use hyperwaves. And to illustrate what I'm talking about, I want to do that using the Bitcoin hyperwave. The reason Lee and I got into this teaching mode 14 months ago, actually, we just had our first anniversary, was because of Bitcoin. It's not because I wanted to teach hyperwave. But it just so happened that right after we started, I had already made my call that this particular hyperwave was ended. It had finished. And now we're beginning the final 3 steps, the 5 down, the 6 up, and a long 7 to get to the end of the hyperwave. And then, as you know, Lee and I believe that hyperwave will not be the best thing for Bitcoin after we get to the bottom. We want something else to occur because we believe in the ability of Bitcoin to be able to solve some very big world economic problems. So I'm hoping we don't see another hyperwave when this one finally comes to an end out here somewhere towards the summer or fall or winter or spring of the next year, and we get below $1,000. But this is a great illustration for people on what you are going to learn in our webinar. because what I found is we ran out of time after just 8 hours. And partially that was because I had never presented it in public before. So this 8 hours is going to be much more concentrated, having to do with three things. The three things are: first, identifying when a hyperwave is developing and how you can find them. Number two is how you trade it in terms of the phase lines, when you buy, when you sell, when you add to, when you use leverage, when you use options or futures, now that futures are available and options are available for Bitcoin or GBTC or other ways of playing it. But it's the actual use of things like consensio at each turning point along the route that is taken, both on the upside and the downside, to manage your money, knowing that this thing exists. Okay, I'm going to go off screen share because I want to give you some details of how I intend to accomplish this thing. And the way I am going to do that is by just giving you some very simple things to look for not only those people that have already heard this in Las Vegas, who are all invited to listen to this webinar on Saturday and Sunday. We had a number of comments from people saying, I wish you had taken 2 days and you could do 8 hours each day to put all of the things in that you wanted to cover in the agenda. And we've taken that to heart. But what I've been working on now is a way of presenting much more efficiently a huge amount of information in that 8-hour period. But it's so intensive that we're breaking it up into 2 days, 4 hours each day. Now, remember, after this is over, you are going to have that video for the rest of your life. You can watch it over and over again. You can break it down into each section. You can rewatch it, take notes, ask questions to us specifically about things you didn't understand. So here are the three things that I intend to accomplish for all those people that are going to listen. And it's beginning to fill up very quickly. I got the good news this morning from Leah, even though we haven't changed any of the details of the agenda. And I am going to write up on our website, lucidinvestmentstrategies.com, much more specific information about what you will be getting. But there are three things I want at the end of this period for everybody to say. Number one is, I now believe there is such thing as a hyperwave. Very few people believe that, particularly very few people who haven't listened to all of our vlogs or looked at all of the examples that we've given. A lot of people will see a vlog and say, oh, they're hyperwave and Bitcoin, that was just a coincidence. It's not a real thing. I want everybody to come away with this absolutely convinced there is actually a thing called a hyperwave. And they all have certain characteristics, each of which will be discussed point by point throughout the first day of this presentation. All of the waves, where they come from, why there's only 7, there's never 8, there's never 5, there's never 6, there's always 7. 4 of them go up and 3 of them go down. One of the 3 that goes down is an intermediate step that actually reverses to the upside. That's called a phase 6. It's the most fascinating of all of them. I don't understand it at all. It has to do with human behavior and the way you and I react to things, but it is there, it's real, it's identifiable, and it's got very specific limitations that have never been violated. I am not stupid enough to think that any of my rules will never be violated. It's just weird that after 100 years and 400 examples, they have not been. So the second thing I want everybody to understand is not only is this a theoretical thing, and just because you haven't heard other people talk about it doesn't mean it's not real. Believe me, when we come out with our book, which we are going to be doing later this year on Hyperwave, a lot of people will be exposed to it in terms of examples and what it is. And then it will be talked about more and more, and that's great. I hope it helps a lot of people out. Right now, I just want to teach those people that have already understood that this thing has the potential of being something that you can use personally for the rest of your lives over and over again across all asset classes with certain restrictions that we will talk about in great detail in the seminar. So the second thing we want to cover is we want you to be able to identify for yourself your own hyperwaves. Almost all of the hyperwaves that I've been exposed to in the last year, I did not find. Other people did. 50 people in our research group have found these. And right up through yesterday, someone on Twitter gave us a brand new one that none of us had seen. And that's what you're going to be able to do after this seminar is over. You can find your own hyperwaves. You're going to know how to plot them, what they mean, and how to trade them. On day 2, what we're going to cover, and this is what we did not cover in depth, and that's why we're making it available to all the people that attended the Las Vegas Hyperwave workshop, is we wanted to cover 25 current hyperwaves in great detail. And we only got through about 15 of them, and we ran out of time, which meant we didn't have time to go over how consensio is used to tell where a shift is taking place from one phase to the next. And we are going to spend a full hour on that on Sunday afternoon. I guarantee we will go through all 25 of the current hyperwaves and analyze each one of them so that each of you can take from the seminar tradable assets in terms of indexes, commodities, currencies, as well as individual stocks, industries, and sectors, so that you can actually use them in a practical fashion, everything you learned at the workshop. So those are the 3 things that I am determined to make absolutely clear. I'm rewriting things. Unfortunately, I'm eliminating a lot of anecdotes because I love anecdotes and metaphors. So we have time to get to the most important things. However, there are still lots and lots of anecdotes. I want to tell you how and why I discovered it, how and why I began researching it, what the main 5 are. We've got somebody working on that presentation right now. So in short or in long, I am very excited about the opportunity to present to as many people as possible my findings of the last 40 years. As some of you know, I can be pretty convincing about some of the things I talk about. But I am more convinced than ever that the most powerful tool in technical analysis is the hyperwave. And I want to make it as available to as many people as possible. Now, it is expensive to a lot of people. And people are saying, well, $1,000 for a webinar is way out of my price range. And my answer to you is that when I learned the sequential trading system in 1979, I spent 1 day at a seminar and paid $2,000 in 1979 dollars. And it was the best investment I ever made. And at the time, I had no money whatsoever. I sacrificed to learn that system, and that's the system that Tom DeMark later learned and that Tone Vays now uses so brilliantly. I've had that in my arsenal for almost 40 years. You will have this in your arsenal for the rest of your lives. I believe that we should be charging 5 times the amount that we're charging. I think it is absolutely worth that. We're trying to keep the price as low as we can for as many people as possible, knowing that you will not only learn during that 8-hour period, but you will have it in hard form to go back to for the rest of your lives. I've still got not a video, but all of the original documentation from 1979 on the sequential that I refer back to over and over again. The pages are falling apart now as Tone Vays can uh, give evidence to, because I let him go through it to see exactly what the original idea of sequential trading system was. That's what you're getting in the webinar. You're getting the absolute original from the person that has spent 40 years developing it and has used it in the stock market crash of 1987, in the gold and the silver hyperwaves in the 1970s, in the dot-com bubble running up to 2000, in the mortgage hyperwaves in 2006, 7, and 8, and over the last 10 years, bringing us right up to today. But most importantly, from Leah and my point of view, is what it did for us and our clients that listen to us for Bitcoin. It kept a lot of people out of a tremendous bear market that has not yet ended. And that in itself, for those of you who are interested in Bitcoin and in the possibility that there's a tool that can tame even the wildest of asset classes, is why I am being so passionate about trying to get people to listen to us this Saturday and Sunday. And with that, thank you very much. And I'll turn it back over to Leah.
Hey, Ty. Well, so here's my question for you. Are you willing to take questions?
Of course.
Boom. I actually put in the live chat that I thought you'd say, are you willing to stay here and talk all day?
Yeah, absolutely. All night long.
Okay, sounds good. First of all, I will tell you that in the Medium piece that I wrote, I actually originally had written that you showed me all your charts and that they looked as if they were written on papyrus, and I decided I'd take that one out.
That's great.
Okay, your first question. And yes, please send through, guys. Send me some good ones. So one, do you think buy orders will get filled if Bitcoin reaches that 1K mark?
Again, do I think buy orders will be filled at the 1,000 level? I think at the 1,000 level, remember, I do not believe 1,000 is the bottom. I believe 1,000 is my terminal target for a hyperwave. But just picture what's going through in people's minds to get us from 3,000 down to 1,000. As we sink below 2,800 to 3,000, there's going to be a panic. Why? Because so many people thought 3,000 to 3,200 was going to be the bottom and it would hold, just like 6,000 was going to be the bottom and hold. And what happened at 6,000? Don't dismiss what occurred during the months that the price of Bitcoin continually hit 6,000 and bounced. Remember what you read on Twitter. Remember what all of the other analysts were saying about that being a bottom. Remember what brilliant hedge fund managers were saying at a 6,000 bottom. Novogratz and many others. Remember that ARK Management had the best returns of any money manager during the upswing in Bitcoin and the cryptos, and then they lost it all in the down move. Remember what Tone Vase and I continually said every time it bounced off 6,000, that it wasn't going anywhere. Now, that didn't mean that you acted on it, but you heard us say it over and over and over again and never varied. And then when 6,000 broke, what happened? In literally a matter of days, we were at 3,100, a 50% drop. What I am saying from this point down is just imagine what's going to happen if 3,000 doesn't hold. Just go through and see all of the people on Twitter, on YouTube, all of the analysts, as well as all the commentary, all the chats saying that 3,000 is going to hold. What happens when it doesn't? It is not going to tiptoe down. It will flush. You will hear a flushing sound that will quickly take it down below 2,500, below 2,000, maybe down to 17 or 1,800. And then it might very well establish some kind of a bottom again. I believe that bottom will not hold until we get down to 1,000. So the question is, are there so many buy orders lined up at 1,000 that once we get down there, it will be difficult to fill your order? No way in the world. There are very, very few buy orders at 1,000. What you will see is it'll cut through that like a knife, a hot knife through butter, and that will be the capitulation. No one will be buying. Everyone will be selling. You will have all the time you want to load up on Bitcoin at much, much lower prices.
If we hit anywhere in the 1,000 range, does this count as completing phase 7? As an example, if we hit 1999, would it still count?
Not to me, it wouldn't. It would to a lot of other people. I think people would give some leeway. I think down at 1,300 or 1,200, we can make a case for it, that would be a terminal point. Why? Because on some of the exchanges back in 2014, 15, and back earlier, we broke through 1,000 a little bit. We got up to 1,300 on one of the exchanges. So there's a range depending on which exchange you're looking at. And as you know, I don't trust any of the pricing on any exchange. We didn't have an index back then. And the index today is influenced by some of the big exchanges. So look, it's not like the Dow Jones Industrial Averages having a target of 1,000. This is something different because the pricing is so difficult. I would be willing to fight if we got down to 1,300 to say that could be the terminal point. I don't believe it is. I believe it's going to be below 1,000. And I think all the exchanges will end up below that level. At 1,900, no, that's too far. That's too big of a miss. If 1,900 and something turned out to be the ultimate bottom, and then Consensio and other things gave us a sign that there had been capitulation and they were beginning moving up, I would say this would be the first time I have seen, without a funky hyperwave, us not return to the bottom. And I would use that as an exception going forward, that for whatever reason, Bitcoin never hit its terminal point at 1,000. That's the way I look at it.
I'm going to talk quickly because these industrial machines are going nuts.
I don't hear anything. So
oh, yeah. Okay.
Yeah.
They're about to go at it. Okay.
Well, that's great. Hey, there was a dog in one of those.
A cat. Oh my God, PETA's gonna come after us.
Oh my God.
And what price point exactly, I think being the operative word that Nick is trying to mess with us on, invalidates the Bitcoin hyperwave?
It's not invalidated. We've had a complete hyperwave. We just don't have this last little move down to its terminal point. We've had a phase 1, a phase 2, a phase 3. Once you're in phase 3, you've got a hyperwave. We had a perfect phase 4. We had a perfect phase 5. We had a perfect phase 6. We've had a perfect phase 7. The phase 7 broke through the funky hyperwave that could have occurred at phase 3. We've had the phase 7 breakthrough, a potential funky hyperwave at phase 2. And now we are doing the mop up that unfortunately is going to take a number of months and maybe even longer to get to its final terminal point. No matter how you look at it, this has been an enormous success as a technical tool all the way to the top, and so far almost all the way to the bottom.
Okay, so true, given that it's still active, is there a particular price point that will say that it's invalidated?
No, it's totally validated already. It was when we broke through 6,000, because 6,000 was the phase 2. Once that is broken, it's complete. Now it's just waiting for it to get to as low as it's going to go. So it's not invalidated. It could turn out to be the only one out of 450 examples that didn't make it all the way back to the phase 1 line. That's a very different question.
Maybe
And
then
it's not going to happen.
maybe then elaborating on that and bringing it back to some of our previous videos, which some people on this know, at what phase lines do invalidate.
Oh yeah, great. Any breaking of a phase 2.
Oh, and Ty, to be obnoxious, if you want to put the exact price points that we had put as the trend lines and targets as well during that time for Bitcoin, I think people want to.
Sure. Let's do a screen share again.
A diddly doodle.
Yeah, we'll do a diddly doodle on Bitcoin.
Yahoo! Intro to Hyperwave again.
Let's bring this guy up. Okay, let's take a look at exact price points. Here is the phase 2 line. It was going up at $85 per week, all the way down from 1,000 up to 6,000. On the week that it broke, we broke it right at about 6,034 off of this chart, which is Bitstamp on Bitcoin Wisdom, bitcoinwisdom.com. Okay. So what that meant is if this had held and we moved up from here, this would be still phase 2 of a hyperwave. And we could have gone to 3, 4, all the way up to 100,000 or some huge number. It did not. It broke. That ended the phase 2. This was the phase 3 line that was moving up very steeply. I think, I can't recall, but it was 200 and some dollars per week. Notice the angle is much steeper. This is $80 a week. This was 200 and I think it was $220 a week. I could go back and check that out. So where we did break it, we came back and closed above it. Here, here, these closes were above it. This one tried to break it, came back up above it. Finally, we broke it and closed below it. That ended the phase 3 line. When a phase 3 line is broken, it disappears. It's no longer there. When a phase 2 line is finally broken, which it did right here, it's a little over 6,000, it disappears. It's no longer there. What you are left with is a completed hyperwave. with a phase 1, phase 2, phase 3, phase 4, 5, 6, and 7, all the way back to the beginning. Now, Tone and others have asked, how do you draw a phase 7 line? And a lot of people like to draw it like from this point to this point. You don't. A phase 7 line simply means once you've gone through a 5 and a 6, that all of the rest of the activity is going to be below a trend line. But if you draw the trend line like this and then it breaks it, you simply move that phase 7 trend line. And then you move it again, and you move it again, and you move it again until you have finally come to the terminal point, which then ends the entire hyperwave. Phase 7 is the only line that you don't draw right from the beginning. And I call that maniacal. I said the reason phase 7 is so maniacal is it takes forever to get where it is going. And it throws in all these false moves trying to suck people back into it. But eventually it all gets down to the terminal point, which in this case is 1,000. Now, if the questionnaire was saying what happens in this part of it, the answer is, and I just need to, you're going to learn all of this if you join our seminar, and I hope you do. Let's see if that works. I'm going to draw this from this point to this point. That's the phase 2. On this phase 2 line that was finally broken on the big down through the 6,000 area, anytime any of this stuff ever broke below that line, that's the end of the hyperwave. That invalidates it. For those of you that have heard the vlogs before, you know that I don't consider a hyperwave until phase 3, which is this angle from here to here. Once this line is established, any break below this line ends the hyperwave completely. That means that the hyperwave is over. But if it occurs before you've gone up into a phase 4, down into a 5 and a 6, and that phase 3 line holds the way it did 11 times on a weekly basis over a long period of time, then you go up from it without breaking it. Let's just assume this did not occur and we bounced off of it and kept going up. We would be in a phase 3 of a hyperwave, not in a 4, 5, or 6, or 7. And you would know that as soon as you took out the top back here at 19,666. We don't have to worry about that because that didn't happen. It was broken, so it disappears. Now, also, only 1 out of 5 phase 2s end up going through an entire hyperwave. Whereas when you go into this angle, phase 3, 85%, only 15 out of 100 that go through that formation right there, don't move, stop it, thank you. 85% that go into this next angle will go all the way up, all the way back down. And 100% of this angle go through an entire 7 phases of a hyperwave. So you go from 0% in phase 1, not a hyperwave. 1 out of 5 or 20% in phase 2, not a hyperwave, because the probabilities are against it going all the way up. 85% of a phase 3, all but 15 out of 100 will go all the way through. If this had come down and broken that phase 3, that would be the end of the hyperwave, and that would have been the 15% of hyperwaves that never make it to a 4, 5, 6, or 7. But once it didn't do that, and it bounced off, never came back and touched it again, and then accelerated up into almost this vertical move, which is called a phase 4, I have never seen an example that doesn't go through a 5, 6, 7, and finish at the bottom, except the 1 out of 5 on the downside, or 20%, that do become a funky hyperwave, and they respect either the phase 3 or the phase 2 and never break it. Bitcoin is the perfect hyperwave because it did not violate the phase 3. It did not violate the funky hyperwave on the phase 3 going the second time or on the third time. So that's a lot more than you wanted on the answer, but I just wanted to be as specific as I could.
Amazing. Okay, they're getting loud. So last question, because we're getting tips. It's so exciting, Tyler.
Wow, thank you all.
Thank you. $5. We've made it. Thank you. We will go to Starbucks. So this is a good one. And I think maybe we can end on this one. What do you recommend to people who bought the tops of Bitcoin prices with irrevocable amounts of cash, Mr. Money Manager?
Unfortunately, you're in very good company. 95% of the people we talked to took it all the way up and rode it all the way down. Luckily, a number of people heard us early on, and a lot of them are very grateful for getting out at 13,000 or 10,000 or 8,000 or 6,000. Unfortunately, the numbers up at 15,000 and 13,000, 10,000, 8,000 were way too few, which meant we were too late to our game, Leah and I, getting the word out. A lot of people, though, got out at 6,000. And we are very grateful for that. And they are very grateful for it, even though at the time that was a very difficult decision to make. When you've just dropped 75% of your paper profits in the previous 3 or 4 months or 5 months, or however long you had to wake up in the middle of the night wondering what the heck was going on, why the hodlers kept you in as long as they did, and all of that sort of thing. The question is, what do you do now at 3,000? And everybody is different. And I'm not going to give a general statement. I would say, knowing what I do about Hyperwave, that I would rather have 3 times the Bitcoin that I now have at $1,000 than I have at $3,000. So I would be exiting the position. But I know Hyperwave, and I talk about it confidently because I've seen so many of them. You are not in that position. That's why I want anyone that attends this webinar to say, okay, these are real. These make sense. And I just have seen 100 examples of them across 100 years in every possible asset class. I am now a believer. So the next time around, you don't make that mistake that you did up at the top, that you are ready to exit, you're thinking about exiting, and you pull the trigger. That's what this webinar is all about, is making sure you understand that. Some of you might, after 8 hours, come away saying, well, I'm still not convinced. I think this or I think that. That's fine. But I want the vast majority of people to understand that this is a real thing that you can use, and in the future will make you a lot of money potentially and save you a lot of money almost assuredly.
Thanks, Tyler. I think I'm going to end it. I feel like I'm actually shaking on the ground. And so is my
Great.
camera.
Well, thank you very much. Thanks, everybody. Thank you, Leah. And lucidinvestmentstrategies.com. Go to products. Go to the webinar, not the workshop, the webinar, and click the magic button. Thank you very much.
Yahoo! Okay, bye, everybody.